Tired of the pressure of day trading, constantly watching the ticker, and battling for the perfect entry price? If you use M1 Finance, or are thinking about it, you already know it's a platform built on the philosophy of long-term, automated investing. But in a world obsessed with real-time quotes and instant execution, how does M1 scheduled trade execution actually perform? Does it leave money on the table, or is it a hidden advantage for buy-and-hold investors? Let's dive into a performance review, trading execution on M1 to see how their unique system works for your portfolio. 1. Understanding M1's trade windows. The first thing to understand is M1 does not offer instant, real-time trading. Instead, they operate using trade windows. This unique approach is actually M1's secret sauce for offering commission-free trading and fractional shares. There are generally 2 trade windows on days when the NYSE is open. A morning window starting around 9:30 a.m. Eastern Time. An afternoon window starting around 3 p.m. Eastern Time. By batching all client orders into these 2 windows, M1 minimizes the transaction costs, which they then pass on to you by eliminating commissions. 2. How orders are filled. When you place a trade, either a new deposit, a withdrawal that requires a sale, or a manual rebalance, that order is queued up for the next available trade window. Your order is executed as a market order at the best available price during that window. Importantly, M1 utilizes a strategy called dynamic rebalancing. When a trade happens, your money is automatically directed to the slices of your pie that are underweight to bring your portfolio back to your target allocations. This automation is a huge benefit, ensuring your investments stay aligned with your long-term strategy without manual intervention. 3. Execution for the long-term investor. So, how does this execution perform? It's excellent for long-term investors. If you are dollar-cost averaging and have a time horizon of years or decades, the difference between a few cents on an entry price is statistically insignificant. M1 system forces you to stick to your plan, eliminating the temptation to overtrade or panic sell. This behavioral control is arguably the most valuable part of M1's performance. However, it's terrible for active traders. If you are trying to capture a quick price movement, react to sudden market news, or use a limit order to control your entry price, M1 is simply not the platform for you. The lack of control over the exact execution price is the deliberate trade-off for zero commissions and automated simplicity. The verdict. Ultimately, M1's trading execution is a feature, not a bug. It performs perfectly for its target user, the passive, long-term investor who values simplicity, automation, and sticking to a plan over micromanaging trade prices. It's a tool for disciplined wealth building, not a playground for speculation. With that said, thanks for watching and until next time.